Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, November the 11th. The year's 2022. Let's talk trading. Weekly wrap-up. These videos are for educational purposes only. Your results may differ from mine. So if we take a look at the weekly, we can see that big gap down of the pound has filled. We have one pair that did not fill the gap. And as you can see, we broke out of the upper wick zone of the previous week's candle. Taking a look for the month, you can see we broke out of the high of the previous month, breaking out of that wick zone. In fact, we broke out of the last 2 months' highs, coming in on the 1.18 mark. And you can also see we broke out of the opening range for the week yesterday, and also yesterday we broke out of the opening range for the month. So we're well above those two opening ranges. For the year, we have not added to the yearly range. You can see we are now 1,731 pips below the yearly open, 1,437 above the high, and 1,954 below the, above the low, 1,437 above the low, and 1,954 below the high. Yesterday we broke out of the daily inside bar from 18 days ago. And we broke out of the monthly inside bar, which was last month. You can see today we touched it down here, or close to it, at 1644 and bounced. We're now 152 pips above that level and rapidly approaching 118. And today we only have 3 pairs less than 100. With the beast clocking in at a whopping 304, and the Swiss yen coming in at 291. And notice dollar yen's down here at $1.38. Remember, it had gone up to let's see, where was that monthly high? It was almost at 152. So trading the yen short this month would have been a smart thing to do. Kind of kicking myself because I was shorting at this area. Should have just left it alone. But you just never know. You have to take the pips when you can. And the buy zone today, let's switch this back to the H1 time frame. As you can see, we flirted with that daily open 1, 2, 3, 4, 5, 6 times. Crossing above and below. And just a couple hours ago we had a cross to the down, but then it crisscrossed back up, and you can see we're up about 84 pips from that daily open. Red rats, get ready. You've already feasted a couple of hours ago, and then a few before that, and a few before that. So it might be time to get ready to feast again. H4 candle color this hour went from red to green. You can see we're falling below that previous H4 high. The Bambino Flex indicator said near the pivot, which we never was near. And also the pivot trading plan said to go long near the pivot. Once again, we missed that daily pivot. You can see there's still a couple above that need to be taken out. And we've got a lot above this year, pivots to be taken out. But on the weekly, you can see we took out this pivot here from a few weeks ago, and a couple of days ago we took out this pivot from a few weeks ago. So we've been taking out some weeklies. in and out of that upper wick zone. You can see here we went in, came out, and then we danced across it a few times before it finally made this last break. Weekly range 509, the 75 percentile level. And you can see here, high minus previous highs 187 at the moment, 75 percentile. We did not break out of the previous week's low. High minus close right now is only 4 pips, but you close minus low for you rat traders here, 505 pips on that weekly, off of that weekly low. High minus open 495, open minus low only 14 this week. So this week's basically been a green week. And looking at the Walmart lines, you can see we're pretty much at the top of the hour right here. And so we've got a long trigger at the 118 and a short at the 117.90. We've been talking about looking for trades. One thing is to be aware of certain levels. So knowing the previous H1 high, previous H4 high, previous daily high, weekly high, monthly highs, those are important numbers in the sense that could be a lot of price action along those areas. As you can see, the hour just went to the red. We came across that open at 117.93. So you can see here on my chart, I have some of these areas delineated, so I know what's going on and where to look for trades. The lower high, higher low, you can see we're getting ready to, well, actually we have broken it by half a pip at the 1792 level. Have a 3-ball up there. We had a M5 lower high down at 1727. You can see we crisscrossed that a couple of times before price finally made a nice move to the upside. And the range here, November, right now we've got 650 pips. And we're, what, 2 weeks into the month? So you can see we're close to October. And looking down the chart, you can see we're about somewhere in the middle. Let's take a look at the ATR. $598, so we've already exceeded the ATR. And year-to-date accumulated, once again, we have not pushed that range since September. And we'll just have to see where we're going to fall. So right now, that's out of the past 20 years, that's the 3rd biggest yearly range. And if we hold that, if we don't get past the 35, 38 number, that's going to hold for the year. So we'll just have to wait and see what happens. One thing to note is if we look at the quick peek here, close minus open, you can see we've got 2 green months in a row. So pound might be taking a new course. But once again, we're still going to have at least 10 or more trading days left this month, so it's only about halfway over. So a lot can happen in those 10 days. And Year to date, close minus open, the percentage, you can see now we're only down 12.78% for the year. For those traders who like to look at the percentages. And we'll put this back to the range by month. And let's see. Notice these distances from to the indicator 2 have been decreasing. And I'm curious, anybody out there using indicator 2? It's one that I created back in about, I don't know, 2004, 5, back when I was trading stocks on TradeStation. It's an oldie but goodie. It's based on the EMA 5 and just basically following close. But there just seems to be a lot of price action when price gets near that EMA 5. And how I stumbled upon it, I was waiting in the dentist waiting area, and this is decades ago, and I read an article. In fact, if I'm not mistaken, this was in the 80s. I can't remember the magazine, and I wish I could find the article where they tested all these different moving averages, and they said EMA 5 was the best. So I started playing with that. I had like indicator 1, and I can't even remember what indicator 1 was, but indicator 2 seemed to be the one that actually paid off. And I know there was a couple of traders, one guy, trend trader Harry, I don't know if he's still out there or not, but he used it religiously. And a lot of times I'll use it as a bias, and as you've seen, Walmart likes to use it. We're coming out of the flip-flop zones for scalping. So I'm wondering if I hadn't seen any questions, so hopefully we've answered the questions. We're going to probably do a few more looking for trades, since we're getting positive feedback on that. I guess some people are understanding, I guess, doing things, on the computer almost real time. Unfortunately, I just don't have the bandwidth, or we could do YouTube lives. But living in the rural area, I just don't have that bandwidth. So I hope everybody out there is having a profitable week and month and day, for that matter. Also, just a reminder, I did post those templates that we used in the past few videos, looking for a trade. The ones that Walmart uses, they're out there on Crestlick.com. I posted them under the video, so if you want to download those templates, they're free. So, fellow traders, that's it for the weekly wrap up, and I'm going to wish you all have fun this weekend, be safe, and when you come back to your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.